Welcome to the FEG Insight Bridge. This is Greg Dowling, Head of Research and CIO at FEG. This show spans global markets and institutional investments through conversations with some of the world's leading investment, economic, and philanthropic minds to provide insight on how institutional investors can survive and even thrive in the world of markets and finance.
In today's episode, Euro Trash or Treasure, we will take a deep dive into European equities with Richard Bruce, founding partner of Trinity Street. We live in a U.S.-centric world that has been dominated by large-cap U.S. equities for years. Are we ignoring the value across the pond? Learn the reasons for the differences in valuations. What sectors and themes are most interesting? And does Europe have the same index concentration issues as the U.S.? Don't be an ugly American. Listen now. Richard, welcome to the FEG Insight Bridge.
Thank you very much for the opportunity to participate.
So, Richard, would you mind introducing yourself?
Sure. I'm the founder of a firm called Trinity Street Asset Management. We're a London-based equity manager, global and international equities. I started it 23 years ago. And we look globally with a bottom-up fundamental stock picking approach. We visit over 1,000 companies a year, and we basically try and deliver portfolio management in a way that the larger firms fail to, following our nose, following where we have conviction, being unbureaucratic, etc. It's something that is based on portfolio management conviction.
Well, I should know this answer, but what is Trinity Street? Why are you called Trinity Street?
So about 40 years ago, I graduated from a college in Cambridge called Trinity College, Cambridge. I was a historian, and I had rooms in my first year in a street that ran alongside the college called Trinity Street. So there is a meaning to it. It's also a name that isn't linked to an individual, which I think is always quite healthy insofar as if something happens to that individual that's unexpected, the business can continue over an extended period and not find itself linked to some founder who, for whatever reason, voluntary or involuntary, is no longer there. So I think that's a sensible approach to naming a business for the long term, and everything we do is kind of long-term focused.
I like it. Well, it's better than Main Street or Back Street or any of those other ones. Trinity Street's pretty good. I wanted to talk a little bit about Europe. Even when I was over in London just a few weeks ago, everything is about the U.S. Everything is about the U.S. tech sector. Are we missing something by not focusing on Europe? Europe is a lot cheaper in terms of valuations. Is that a good measure?
Well, I think every stock market is made up from its compilation of different names, right? And these names do well at various stages in an economic cycle or various stages in a product cycle. I mean, you talked about US tech, but a lot of that tech, when you think about the creation of AI, will be adopted, exploited, developed by European names as well. So yes, you might have that happening in the US now, but the benefits will spread throughout Europe and throughout the rest of the world. And also some of the key companies that are involved in building those chips that make AI possible and make that tech revolution possible are actually from companies like ASML in Europe, which makes semiconductor capital equipment, or ARM, which is that UK producer of technology for things like mobile phones, which make them much more efficient and will make data centers much more efficient. When we look at Europe or the US or wherever, we don't look at a geographic block. We look at a series of companies. And so long as you are selective and you're not just, say, buying an index, in other words, a bit of everything, then you have the opportunity to be very creative. But the discipline, I think, is identifying those businesses which are different, which are compelling, and which over the long term, according to whichever model you have, we have a model based on companies going through structural change, for example, but will develop good returns for clients over the longer period. So I think that geographic boundary is often a bit of a misnomer. And, if you sit in the US, there'll be times when you might drive a BMW or use a Louis Vuitton handbag or, whatever it is. There's a lot of European stuff sold in the US. There's a lot of European stuff sold in Europe. So I wouldn't be hung up by a boundary as to finding a good portfolio.
And you mentioned some great companies there. And to be fair, a lot of the kind of nascent technology behind AI was developed in Europe and in the UK. But it seems like there isn't as much software and maybe kind of the media stocks. And that's the difference. I mean, there's some pretty amazing, and you mentioned a great Dutch company that makes the machinery that makes chips and basically has a monopoly on it, but it doesn't have the metas of the world. Is that the big difference for if you were looking at it on index per index perspective? Is that the difference in valuation?
Yeah, I mean, the Magnificent Seven, as we know in the US, have been responsible for a lot of the earnings growth and the inflation of values over the last few years, which of course have come back, partly because interest rates have normalized. And now we're back to a world of sort of standard cost of capital rather than free money. And in a world of free money, be it technology or be it Japan in the 1980s, where I started my career, you get distortions. In Japan in the 1980s, the entire stock market was trading at 50 times earnings. It was only this year that you got back to the same absolute level on the Nikkei that you had in 1989 when actually I was in Japan. It's taken a long, long time. And so you do get some significant distortions. I think one of the constraints that Europe's had, and I do think it is being addressed, is that the regulators in Europe have focused quite a lot on only the consumer winning. And that can mean that you never allow champions in any particular sector. It could be telecom, it could be stuff that's driven the social media companies. And I think Europe has recognized that sometimes they need to be a little bit more flexible. And we've certainly seen from some of the senior regulators in Europe a more open-minded approach to that. And I think perhaps in the States, you're also seeing a little bit of a pushback on what has been the case, particularly with Ms. Khan and the way that she approaches regulation. So I think there's probably a balance you need between allowing creativity and stifling competition through excess regulation. And I suppose Europe has been on one extreme, maybe the US has been on the other extreme, and both would probably quite healthily come towards, more of a central land. Because, I mean, if you look at, for example, in the US, the debate about the regulation of social media and the damage that is done to children through getting smartphones aged 5, 6, 7, 8. There's no doubt that since 2012, the growth in mental illness amongst students, and you measure it with things such as suicide, is a really big problem. And that has coincided with the growth in smartphones. And so it's important that something is done. But again, you don't want to snuffle out creativity. I mean, it's interesting. In China, they are very disciplined on social media. They're very disciplined on video gaming to the extent that, you can only play them a certain number of hours per day. You can't have social media in the same way. And so they are very protective. And maybe the US and to some extent Europe need to change the regulations to protect children a little bit more.
I agree with that statement. And you're right that Europe is probably a little too aggressive on especially the data privacy issues. It feels like the only thing you hear about tech in the EU is that they're suing Google. But some of the things they're trying to accomplish aren't so bad. Again, it's trying to find that happy medium.
Just to add to that, I mean, the most obvious example of that is taking AI as created by, these leading companies in the Valley and in Seattle and exploiting it through businesses, for example, in the music publishing area or in the gaming area. You talk to businesses that are creating games. The application of AI means that software writing process is accelerated. And as a result, you get a productivity enhancement because the challenge of productivity is not only an issue in Europe, it's also a position everywhere else in the world. And if you can improve productivity through the use of AI, then that is good for global. And so I think this whole wave of technology that's coming in now will be a major spur to company earnings, to efficiency, to productivity, and therefore to overall economic wealth in all countries.
I wanted to talk a little bit about Europe as a whole. And I guess the point being it's not a whole. It's not homogeneous. It's heterogeneous. Germany's economy is going to act very differently than the Spanish economy. Maybe you can talk just a little bit, and you're not a macroeconomist. You are a stock picker. You're a fundamental stock picker. However, you get a view, right, by knowing the companies. What areas, countries are doing well right now? What are kind of flat on their back?
Well, there's no doubt that Germany in particular is being buffeted by what's happened in the last 2-3 years. In fact, you could go back further and say that ever since the nuclear accident and the tsunami in Japan at Fukushima, which was followed by the Germans closing down all their nuclear reactors, that the energy question facing Germany has been a big problem. And then, of course, on top of that, you layer the Russian invasion of the Ukraine and the decision by Europe to close off imports of oil and gas from Russia, which it's a massive influence on the cost of building stuff in Europe. Germany used to get 40% plus of its energy from Russia. But what is really impressive is, faced with these challenges, Europe, and Germany in particular, has responded very quickly to alternative sources of power. Some of that is through importing things like liquid natural gas from the southern part of the US. Other supply has been effectively through the creation of more renewables. There's this wonderful story of the fact that in Germany, some of the energy companies were restricted from putting wind towers in the ocean because the fish would swim into the wind tower and hurt themselves. And so there was this question, well, we can't put in a wind tower because fish are going to hurt themselves swimming into a piece of metal. Now, you would have thought the average fish is intelligent enough not to swim into a metal tower. But it was a real problem. Has had a bit of a reality check over the last couple of years.
And that stands for not in my backyard.
Or even in the ocean, right?
Yeah.
And so not in my backyard classically would be a wind tower in your backyard. But I guess the point is that when you're faced between the choice of Putin invading your country or putting a wind tower into the ocean and letting the fish potentially damage their noses, it's a pretty easy decision. And so you've seen a kind of wake-up call to what's going on. I mean, the other thing, in terms of creativity and change, and firms like Trinity Street like investing in business where there is change going on, because it means that you're likely to get some positive surprise on earnings of the businesses that we invest in. But when you look at something like the defense sector in Europe, European nations had been benefiting from the peace dividend over an extended period. And some of that criticism of the European countries for benefiting from the US defense umbrella and not putting enough in from their own contribution was fair. The bottom line is that was fair. But the change is you are seeing a massive reinvestment now. A place like Germany is a classic example. Germany effectively had an air force where you couldn't take off. It had tanks that couldn't move. You had soldiers that didn't have bullets. It was a real problem because in an ideal world, of course, you don't want to spend money on this stuff. But the problem is if you don't spend money on this stuff, you get some man coming in or woman coming in and invading your country. And so you've been through a massive change in Europe over the last 18 months. Now, interestingly, some of the European investors are still very preoccupied with aspects of ESG. Some aspects of ESG make a lot of sense. But to call defense as socially unacceptable, I think is a really difficult call. Because, how can you say that the nuclear umbrella in Europe hasn't worked for 80 years? There's a lot of navel gazing that's been going on. And to the credit of people like the European Union, they have changed their position. But a lot of European allocators and large asset managers still will not buy into defense companies. And so I think this is in reality a multi-decade change going on in Europe. Unlike the US, where big defense companies have had a pretty solid amount of demand for a long period of time, that has absolutely not been the case in Europe. So there's one example. Energy transition is another example. So, two really good examples of how things are changing in the last couple of years, where, again, there will be plenty of opportunities. And there are lots of stock-specific examples, of companies benefiting from that.
It's one of those things where if you're just buying an index, you hope everything goes up. But if you're trying to pick stocks and create alpha, you need dispersion. And Europe has dispersion. There are some major tectonic shifts going on, one on the defense side, right?
Yeah.
Energy transition. I mean, Germany, and it's probably going to get through all this, but they sold a lot of components to China.
Yeah.
China has a slowdown.
Yeah.
They benefit from Russian gas.
Yeah.
That went up. And so you have to kind of figure it out. And they're starting to figure it out, although they've probably been the weaker area for the last couple of years. But it's funny, some of the other countries who you would normally think as being fairly weak are pretty strong, right? Like you're starting to see some strength overall in Europe.
There's a really interesting comparison between what's been going on in some of those southern European countries and what's been going on in the US with the IRA. So one of the criticisms of current US government policy is that inflation is a result of fiscal spending. Well, in Europe, if you look at the countries that are the big beneficiaries of the European equivalent to the IRA, places like Italy, Spain, Greece, it's the same thing. You've got very large transfers, and it's pretty difficult if you send somebody $100 billion for them not to grow a little bit faster. And that essentially is what happens and has been happening. I suppose one thing that is more in their favor than, for example, somewhere like Germany, is that they would have been less dependent on Russian gas.
Yeah.
So, there they have an advantage, whereas Germany has a disadvantage. And the other thing I suppose that's notable is that Germany is front and center of the Chinese assault on its auto industry. So one of the other big changes in Europe at the moment is that the move to electric vehicles is a pretty major threat to traditional German car industry. I mean, there's a very interesting statistic today, which was that if you look at March car sales of electric vehicles, which includes plug-in hybrids, the big Chinese manufacturer, BYD, had sales year on year up by 40% to a number that's, say, 250,000 vehicles in March. Volkswagen, which, historically has been one of the world's biggest car companies, sold 20,000, down 30% year on year. And that encapsulates the problem that Europe faces at the moment in one of its biggest industries, which is that China has a major competitive advantage through its batteries. Because, if you're thinking about the car industry, the key things to get right at the moment are batteries and software.
Yep.
Tesla has the software, China has the batteries. And so you've got this period where there's a lot of adjustment going on. Now, I think over time, the battery costs will come down for everybody and pretty rapidly. So maybe that advantage disappears on a 5-year view. But historically, people like Volkswagen, but also people like General Motors, have sold a lot of cars domestically in China. And there you have the opportunity today to buy really good Chinese-made cars in China, in the same way that you had the same revolution in Japan in the 1970s, when Toyota and Nissan started producing really good cars and selling those into Europe and into the US. So Europe has to get its act together pretty quickly. Now, there are some companies in there that will do, I think, probably very well, but it's not a given that people like VW and some of the big French companies like Stellantis or Renault, who are front and center in competition with the Chinese, are going to survive in a way that historically they have survived. I mean, the interesting positive, I think, from it all is that at the same time, enforcing China to be a producer of finished goods rather than just components, then their economic interest is in selling a finished product into Europe or the US, for example. And it means, I think, that the leadership of China will recognize the economic benefit of focusing on that rather than worrying about invading Taiwan. In other words, economics hopefully will not necessarily triumph over politics, but will become a much more important part of that discussion. And so, insofar as they are successful in their exports, they will not want to undermine it through being politically irresponsible.
I hope you're right. I wanted to make a couple points. I loved a few of the things you said, and it reminded me of 2 trips. One trip last year back to China. Had gone to China for a long time.
Yeah.
Didn't go during COVID. When I would go there, there would be a lot of American cars. When I went back there were no American cars, with the exception of a Tesla.
Yeah.
And there were lots of BYDs, and I rode in a few of them, and they were amazing. And I don't think they're going to come to the U.S. anytime soon. But when I was in Europe just a few weeks ago, walking around Mayfair, there's all these amazing car dealerships. You see the Porsche and Ferrari dealership. There is a BYD dealership, and it's a pretty nice little dealership that they have right next to all the Rolls Royces and everything else. So it is coming.
Yeah.
Chinese cars are coming for Europe.
Yeah, I think what you'd say is also really interesting, Greg, because the area that I think will survive in Europe are the niches like a Ferrari. The people who are really vulnerable are the mid-market.
The mass production, yeah.
The mass production, because I don't know if you've ever had the chance to go to Vietnam recently, but you go to Vietnam, again, there is a Vietnamese maker of electric vehicles, which are great. I mean, I was there in September and I took one of these cars. It was a hotel car, took me to the airport. It was a very nice car. If people like the Vietnamese can make small volume, comfortable electric vehicles, anybody can. And I would encourage anybody, if they haven't been, listeners, go visit, if you can, the Tesla factory in Cupertino.
Yeah.
because you'll see how simple these things are to make. And a number of years ago, I was in Kyoto in Japan and happened to be at one of the battery makers there. And in the entrance of the battery maker, it's a company called Yuasa, there is a car that was made in 1904. It's an electric vehicle. It's a simple vehicle. So that is the challenge for Western car makers. It's the opportunity for the Chinese. After all, you have the ability of many of these companies to be creative. Look what Tesla's done. You've got other companies around the world who are being creative. So insofar as it drives the entrepreneurial spirit, that's got to be good for the global economy, even if it focuses somewhat on the Chinese at the moment.
And when I think of Europe, we've talked about a few different areas so far. We talked about defense and energy transition. I think of brands and I think of luxury brands. And I felt like the trade the last year, when everybody thought that there was going to be this great Chinese reopening, is the stealth trade is you wanted to buy LVMH because the Chinese would go out and spend money and they didn't. And so talk to me a little bit about the brands. I feel Europe is a country full of great brands.
Yes, I suppose the point is they're linked to history, aren't they? It's the same thing. You're trying to buy that little bit of history. But it's true. I mean, Arnault at LVMH is the world's richest man.
Yeah.
And his great success, his secret, is never discounting. So if you think about the GFC, why did LVMH do well coming out of the GFC? Because they never discounted, which is a really tough thing for a brand owner to do. Because if you're in a world where nothing is selling, you feel, well, I need to sell. If I cut my prices, I might get rid of some inventory and raise some capital. But he never did that. And that means that when you go and spend $2,000 on a Louis Vuitton handbag, you're never going to be able to get it cheaper. It doesn't mean it's value, but insofar as you're never going to get it cheaper, then that can create a sensation of value. Whereas if you go and get Gucci, for example, has been under a lot of pressure in the recent period. If they decide, well, we need to get rid of some of our Gucci loafers, let's cut the price in half by putting them out for an outlet. It's hard for the consumer to think, well, if I'm spending $300 today, should I spend $600 tomorrow? Or should I wait for the next opportunity to buy $300 good loafers? That is the danger. And again, I remember when I was in Japan in the 1980s, you used to be able to go around and in any sort of outlet store, you could buy slippers with Yves Saint Laurent written on them. They were never made by Yves Saint Laurent, but somebody had obviously bought the brand and you just stuck them on your plastic slippers. And so that kind of thing, destroys the brand.
Yeah.
And Arnault has always been incredibly good about buying brands and taking them up market. I mean, another example would be Tag Heuer. They bought Tag Heuer, which used to be able to buy a Tag Heuer watch for $300. Now you probably struggle to buy one under $2,000.
Yeah.
So it's all about what he calls elevating the brand. Very clever, all made in France, essentially almost everything made in France. It's a successful long-term process that gives you a competitive advantage. Your consumer wants that label on the front of his car or her car. And there are also things like road holding, etc., which are important when it comes to a sports car. But one of the interesting things, of course, about electric vehicles is every electric vehicle is fast.
Yeah.
And the other thing that's interesting, if you talked about, Chinese car companies in London, if you get into a new black cab, it will be made by a Chinese company.
Wow.
Because the maker of black cabs in London now, which is called the London Electric Vehicle Company, is actually owned by Geely, which is a Chinese company. So all those electric cabs, which are actually much nicer than the old diesel, noisy, uncomfortable, polluting vehicles, those new vehicles are made by a Chinese company. The buses, you see BYD on a lot of the London electric buses. So again, and that's that point that you might not buy it if you knew it was a Chinese company. But given the fact that they all have these names that no one's ever heard of, how do you know it's not an American company or a European company with a new brand name?
Geely also bought Volvo at one point in time, right?
Exactly. They still own that.
Again, it's going back to, I think, what Europe does really well are these iconic brands.
Yes.
Porsche, Ferrari, Gucci. There aren't a lot of those in other countries because they don't have the history. I do think that is pretty astonishing.
But interesting, you think about, they're not just brand owners. I mean, it's interesting if you ever travel around Chinese factories. Yes, you see German equipment. It's amazing how often you see Italian equipment. So the northern part of Italy is a machine building mecca. They have fantastic machinery.
The part of the country that actually works.
Yeah, Italy is Well, Italy's not that old, as you know, as a country. Neither is
Yeah.
Germany.
Yeah.
And northern Italy is very different from southern Italy.
Milan is very different than Rome.
Yeah. But they have amazing businesses in northern Italy. They have the ability to be creative and deliver. I mean, they make, for example, a lot of the world's steel making equipment. In other words, stuff that goes into a steel mill is made in northern Italy.
I didn't know that. One area we didn't talk about that I feel like has been a theme here more recently is healthcare and pharma in Europe. Could you maybe talk a little bit about that?
Countries like Switzerland historically have had fantastic pharmaceutical businesses, be it Roche, Novartis.
Mm-hmm.
But as is very obvious in the last couple of years, so have other parts of Europe. And the whole sort of GLP-1 obesity drugs from companies like Novo Nordisk. European countries have been very, very successful in developing what is ultimately a form of technology. The UK also, Glaxo, a lot of these companies have been a source of UK technology success. And as we saw in COVID, there were European companies that were delivering on drugs that very quickly dealt with the COVID problem. There is a long history of pharmaceutical research and strength. The difference between the UK and some parts of the world is that the reimbursement in the UK is not as high as it is, particularly in the US. And, I think the US consumer sometimes gets penalized for the cost of drugs, which the pharmaceutical companies defend as, well, yes, but this helps our research, doesn't it? It's true to some extent, obviously, but you get very creative businesses in the rest of the world that aren't reliant on super high drugs pricing. I mean, the cynic would say, yes, but the European companies are also selling product into the US and getting a good fee for it.
Mm-hmm.
There are absolutely great technology businesses, particularly in France and the UK. I mean, if you think about the strength of the pharmaceutical sector, it'll be France, UK, as well as clearly now with Novo Nordisk in the northern part of Europe as well. But that's a long-term source of competitive advantage for Europe and is likely to continue to be so for a very long time.
You're right. They've had a long history of great pharmaceutical and healthcare companies, but maybe the spotlight's been a little bit brighter more recently because of GLP-1s.
Yeah.
It seems like that is the thing right now. And it's kind of led to a little bit of index concentration in Europe. Not as bad as the US. I think it's called, is it granola? Is that what the acronym is called?
Not sure what that one is. I can imagine it would be, yeah.
Like Glaxo would be one, I think.
Yeah.
Just like in Japan, I've heard there's the Samurai 7. Like there's a bit of this global phenomenon where there are just these mega cap companies that are dominating index returns. And again, US leads that with the Magnificent Seven, but you still have it in Europe. Some of that is due to the healthcare industry and pharma.
Yeah, and I think maybe often it is a sign of that particular group of companies or countries peaking out.
Yeah.
Because if you remember when we had the BRICS and everybody was excited by Brazil, Russia, India, China.
And kind of South Africa, right? That was kind of the other S.
Kind of South Africa. I was thinking, yeah, was it really South Africa? But you think, well, two of those are now kind of either complete no-nos in the form of Russia.
Yeah.
Or questionable as in the form of China. So when that acronym was invented, it was kind of peak enthusiasm. So is it peak enthusiasm for the Magnificent Seven? Maybe. It's always very dangerous to make that kind of assertion, but it is fairly mass market when you start to get those acronyms. And you kind of want to be in the wannabe BRICS or wannabe acronyms that are about to be acronyms, because then the market capitalizations would have gone up a lot. The thing that they do highlight is you look at the impact of GLP-1s on human health. Again, these things are phenomenal, potentially. And again, that is technology bringing massive change. There will probably be some side effects. That's not all positive, but very encouraging, again, to see technology driving innovation. And that's probably the worry when you look at a country like China, because, when you have entrepreneurs being attacked by the government, and you only have to look at people like Jack Ma or Alibaba, ultimately, if that means those people don't have the confidence to do what historically they would have done, that's got to be bad for your economic growth over time. And it's why it's the ability of the US car industry to reinvent itself, the European car industry to reinvent itself. That comes from the capitalist success. Not everything is always going to be rosy, but at least you create competitive tension. I mean, you take a business like Trinity Street, right? Trinity Street provides competitive tension to established players because we do something different and we only exist because we do something better. And if we cease to do something better, then we will probably cease to exist. But that's the value of capitalism. You come up with a new idea, you develop it, you sell it to your clients, etc., and you build a business. That is why capitalism works so well. You just got to make sure that you don't stifle it, and that the consequences of capitalism, which sometimes can be uncomfortable, are protecting those who are vulnerable.
Creative destruction. But you're right. If you're an entrepreneur in China and you're worried that you might go missing for 6 months like Jack Ma, you might think twice about this grandiose plan and taking risk. It is certainly a better environment in the US and I would say in Europe and other parts of Asia right now. And so that should be good for the rest of the world and hopefully allows other countries, other companies to catch up on some of those areas where the Chinese had the current lead.
Yeah, and also I think the other point that's very relevant is that the political noise is forcing reinvestment in places like Japan in the semiconductor industry, in Europe, in the US, and that forcing of investment from companies like TSMC or whoever will drive up the relative economic growth of those countries versus China. That is going to be good for the international equity opportunity set.
So I wanted to focus mostly on Europe, but when you talk about Europe, Europe is so global. You end up talking about everybody else. I wanted, just given your history, your background, I'd be remiss if I didn't ask you a little bit about Japan. So I wanted to ask you a couple of questions on Japan. Is it real this time? Is this a head fake? I've been doing this long enough where every handful of years people say, you know what, Japan, it's coming back. Is it coming back?
I think it's got more gas in the tank than it has done for many decades. I still worry that the fundamental drivers of Japan's problems, like a declining population, ultimately lead to deflation. Deflation leads to a dull economic environment because people choose to save rather than to spend. And that is a problem. Now, at the moment, there are a couple of things going on that are helping on the edges. One that I mentioned, which is kind of reshoring, if you want to call it. The other is that Japan, in some areas, has got, let's be a bit more friendly to shareholder bug. The problem I have with quite a lot of that is I don't believe a lot of the managements believe in it. And they do it because other people are doing it. And I think if you do it for the wrong reasons, it's not necessarily sustainable. Japan, without any doubt, had become very, very cheap, particularly during COVID and at the end of COVID. It was the cheapest global developed market. And so there was absolutely a possibility to get some kind of re-rating. And the other thing that was going on is that when the currency, which under Prime Minister Abe, who came to power in 2012, achieved was he took the currency, particularly the yen dollar rate, from 100 to basically 150. So you get a lot of Japanese companies that are exporters suddenly getting a lot more yen for their product. And that could be selling the product into China, it could be selling it into the US or wherever. And so suddenly the P&Ls look much better. The challenge is if you go to an environment where the currency stabilizes, then that one-off, or even strengthens, then that one-off benefit disappears. And I think it's very dangerous to extrapolate earnings growth based on currency devaluation. The other thing that's going on is that there are a huge number of new investors into Japan at the moment, are sort of gung-ho about this, that, and the other, perhaps without the perspective that the Japanese companies like to make forecasts based on hope rather than based on a concrete business plan. Because Japanese companies are required to make sort of 3-year business forecasts. And a lot of the time you can talk to a Japanese company and they'll say, well, yes, we put out this forecast, but we don't really think we can get there. Whereas a US company or a European company, if you put out a forecast, it's because you do think you. So there's definitely a risk that people have piled into Japan because of all these so-called change factors, and they could be disappointed. Now, there is absolutely more change going on now than there has been for a while. But all I would say is be careful. Be really selective when it comes to stocks. Even, funnily enough, something like the political environment. If you look back in the period since the Second World War, the average Japanese prime minister was only ever in power for between 12 and 18 months. And then we went through this extended period, first of all, under Mr. Koizumi, who was a slightly strange-looking guy, in the 2000s, and then under Abe from 2012, when he came back again as prime minister, where you've had much longer periods of political stability. Well, under Kishida, who's the current guy, it's all turning into a mess again. He's almost certain not to stay in power. The LDP, which is the leading political power party and has been since the Second World War, is looking very vulnerable. So we could be back to that kind of instability. And so my point is, I suppose, political Japan is as it always has been. Has economic Japan really changed that much? I'd say you were looking at a glass very half full to assume we are going ahead without any problem. As an example, Buffett very successfully bought into the trading companies.
Mm-hmm.
And they were valued at half book value or whatever the number was. And now they trade at 1.3, 1.4 times book value. I mean, a lot of these trading companies are essentially commodity businesses. As we've had a reasonably encouraging commodity cycle, and you've had a certain amount of pressure from Buffett to change within these businesses, you've had a re-rating. But is it going to go from 1.3 to 2 times book? There's investing in hope and there's investing in reality. And I think some of that stuff is investing. I mean, I would love to be able to say Japan is a country that is now completely changed in a positive way in terms of shareholder friendliness, et cetera, et cetera, et cetera. I mean, I just don't believe that. I mean, some companies, yes, they are changing. Yes, everything was very cheap and now is less cheap. And yes, there is some reshoring, which is helping. But all I'd say is don't get too carried away. And maybe more interesting is a place like South Korea. A lot of that structural change is at a much earlier stage where there is so much more that can be done and where it's much less recognized. I mean, Germany went through this in the 1980s. So countries can change. At this stage in Japan, I would just caution about getting too carried away.
Yeah, I keep hearing more and more about Korea. They look up to the Japanese a little bit, right? And maybe it's just in an envious sort of way, like all this attention is on Japan. They did just a few little things. We can do a few little things and we can catch up. Very interesting perspective, and I think a very balanced perspective from someone who has been in Japan for a long, long time. So we really appreciate that.
And the other point maybe is that Japan changes very slowly. I was there from 1985 to 1990. It took 10 years after the bubble peaked in 1989 for the Japanese to recognize they had a problem. It then took them another 10 years to do anything about it. So it's a very slowly changing. I'm not saying that's a good thing or a bad thing. I'm just saying that it takes time. And so maybe now they are on the right track and everything is going to be great, which will be wonderful. But the other problem is that, the number of young Japanese is declining and the number of old Japanese is increasing and they don't want much immigration. So in contrast to the US, where you've got quite a lot of immigration, or Europe that's had quite a lot of immigration, Japan doesn't. And that is a drag on total economic performance.
Yeah, it's a very closed society. A few final questions for you, and this is a serious one. I know you're a proper Brit, and we had a conversation about this. I want our listeners to understand it. You have a real issue with Americans wearing brown shoes with blue pants. Can you explain this?
I guess it's that point about Louis Vuitton and heritage. Traditionally, business people in the UK will wear black shoes after 6 o'clock or during work times. Loafers are more comfortable. I think both countries can learn from each other.
Do you not like the brown shoes with the black pants or dark suit? You blue with brown, it's a no-go for the Brits.
There is a perception which drives tradition. And I think some people just won't take the risk of wearing brown shoes with hats. But these things change. We've got work from home where you can't see whether people are wearing anything below the jacket. I mean, I could be wearing a pair of swimming costume. I could be wearing a swimming costume here, right? You wouldn't know. Your listeners wouldn't know. Your viewers wouldn't know.
I can promise you he's not wearing a bathing suit. We would not be doing this if he was wearing a bathing suit. I was just curious, as an ugly American, what, if I needed to change. And
I think everybody can learn from everybody else.
I gotcha.
Maybe in 10 years' time, we're all wearing brown shoes and loafers, and that's fine. That's good.
What other hobbies do you have?
I like cycling. I'm about to go on a crazy cycle journey around Japan, actually. I'm cycling from Hiroshima to Kyoto, which is 1,000 kilometers or 600 miles in US and UK speak, with quite a lot of elevation. So 10 days, 60 miles a day, quite a lot of hills. It's always good to have stretch goals. I'm actually hopefully sensibly, not doing it till October because Japanese summers are very hot, very humid. And the idea of cycling 60 miles in, 100 degree would be bad judgment. That's one thing I like doing. What else do I like doing? Some of those old traditional European habits, like listening to operas. And I spent 5 hours listening to Wagner's Ring the other day.
Oh my gosh.
I mean, that's quite hard work. Yeah, I hadn't done that before. That was quite hard work.
Yeah. We don't do that in the U.S.
It was not necessarily something I would suggest. But there's a bit of tradition. London is a great center to have an asset management business. You have the European history, and yet you have the US not too far away. You have Asia not too far away. And being able to be based in one place, visit globally, we think is a big advantage. And, London has a lot that's going for it. There are the challenges associated with Brexit. There are some advantages, but a lot of challenges. The way I always like to look at it is, if you put a customs barrier between every state in the US, what would that do to US GDP? Well, it probably wouldn't be a positive. There are positives, there are negatives, but I think that's probably been a bit of a short-term drag on the UK, but it's not to say that over time it won't bring benefits. Who knows where we'll be in 50 years' time? But independent thinking, is a good thing. And the EU can be criticized for bureaucratic groupthink, which at its extreme, the UK pushes back on and say, well, we don't want anything to do with that anymore. You get other places like the Germans who just sort of ignore what the EU says if it doesn't like it. So you've got different approaches to how you respond, but disciplining the EU from time to time is a good thing. And I'm sure Brexit disciplined the EU into potentially respecting the views of the nation states a little bit more. But the reality is a lot of European nation states haven't been in existence that long.
It's true.
You talked about tradition. France has a very long history. The UK has a very long history. Italy, Germany,
Spain, yeah, all of them.
They're remarkably new countries. So poor countries like, as in people who've been beaten up a lot, countries like Poland have seen their borders expand and contract as people invade them over the last centuries. It's been tough for some of these places. So there is a strength in scale, whereas places like the UK, we don't need that because we've got our own history. So the approach to the EU as to what you can get out of it is very different. But some kind of incremental trade association with probably would be a good thing.
Yeah.
But it'll take time for the healing to occur because there was a lot of ill feeling. There was a lot of animosity, a lot of poisoned relationships, which were very unfortunate.
Better together. Your educational background is history. I'm going to put you on the spot here. Last question. Give me your best history book recommendation.
Can I give you two?
You can.
So one is actually a Pulitzer Prize winning book about Robert Moses.
Okay.
Robert Moses was the park commissioner of New York, who was in charge of parks in New York and the surrounding area from about the late 1930s to almost the 1960s. It's a fascinating description of how New York grew, expanded, but also why there are such infrastructure problems today with things like public transport, etc. It's an amazing story. It's long. It's 1,000 pages, so you've got to be patient. So any book that can keep you interested for 1,000 pages about New York infrastructure has got to be good. And to win a Pulitzer Prize is amazing. So that's one. The second one is a much shorter, but again, super interesting book by Orlando Figues, Figues, who is a historian who specialized on Russia. And his latest book, The History of Russia, is very interesting because it goes back and explains why Putin today behaves the way he does and talks about Ukraine the way he does, and the hang-ups that they have with so much of Tsarist history, and also the way in which Stalinism is sort of being resuscitated in Russia today. It's a really amazing book, and it's relatively short. It's only 300 pages. He is, interestingly enough, a historian from my old college at Cambridge, so Trinity College, Cambridge. And he was there when I was there. But again, an amazing book. So those two, very different, but both very insightful, as I say, for different reasons. But definitely worth reading. You'll need a long vacation in the summer to read the Robert Moses book. If you've got too many long-haul business flights, it's a good one to read.
All right. So put on some Wagner, that 5-hour Wagner, grab the book, start reading. Thank you so much. I really enjoyed it. We covered so much and we focused on Europe, but we went all around the globe. So Richard, thank you so much for your time.
Thank you very much for the opportunity. I hope that your listeners are interested in some of what's been discussed because, Europe is a fascinating place both to visit and to invest in, as are so many other parts of the world outside the States.
I agree. Thank you.
Pleasure.
If you are interested in more information on FEG, check out our website at www.feg.com. And don't forget to subscribe to our communications so you don't miss the next episode. Please keep in mind that this information is intended to be general education that needs to be framed within the unique risk and return objectives of each client. Therefore, nobody should consider these to be FEG recommendations. This podcast was prepared by FEG. Neither the information nor any opinion expressed in this podcast constitutes an offer or an invitation to make an offer to buy or sell any securities. The views and opinions expressed by guest speakers are solely their own and do not necessarily represent the views or opinions of their firm or of FEG.